For sure.
Anyway, so Larry, my trading warrior brother, welcome back to F.A.C.E. Larry, how are you? It's been a while.
Dale, good morning. Blake, good morning. It's okay that you like Dale better.
Anyway,
good morning, Larry.
I'm insecure, and I need validation. And in fact, I have ADD, attention deficit disorder. I can never get enough attention.
Gotcha.
Well, anyway, so
we're here. We are
anyway,
here.
Larry, really a severe decline in the last several months. They took out different groups and shot them, and the last group to get hammered were the oils in the last few weeks. And are you going to share your screen, buddy?
I will. Let's jump on to share screen. Let's go here and let's go there. Okay, can you see my screen?
Got it up there, Larry. Yeah.
Okay, so you see my Twitter page. So we'll get started. Let me know when you want me to get started.
Go ahead.
Okay, so I brought some charts with me, but the first place that I want to start right now is with the Fed, the bond market, interest rates, because I think that we can all agree that what's driving the markets right now are inflation expectations, the Fed, rate hikes, and the bond market. So right now, a key thing that I'm focused on is what's the Fed's course of action. So their next meeting is July 27th. Right now, the futures market is pricing in a 93% chance that they hike rates by 75 basis points.
Okay.
So CPI is next Wednesday. I don't like to make predictions, but it's good to have a baseline view. And I think that CPI is going to come in high. It might not come in higher, but I don't think that it's going to come in on the low side. And I think
nothing to let them off the hook from their planned interest rate.
Not at all. Not at all. You know, the PCE came in, I think it was last week, and that dropped 20 basis points, but the month-over-month PCE actually went up. So the Fed's hiked 150 basis points in the past few months, and what they got was a 20 basis point drop in PCE. So I think that there's going to be some disappointment for people that are expecting CPI to fall off of a cliff next week. Now, I could be wrong, but that's what my expectation is going into next week.
How long will it take, Larry, for, say, for example, gas prices fall with the price of energy in the last few weeks for that to start to show up in the numbers?
You know, it's tough to say. So the CPI is a month at a time. So oil fell off of a cliff this week. So that's definitely not going to show up in the June CPI because that's already closed. So possibly it starts to show up next month. But keep in mind, there's a lot of other factors, you know, besides energy. Energy and food,
of course,
are two of the biggest ones. But the key thing also is there's a difference between peak inflation coming down and their targets. So maybe we don't see over the peak, but I don't know that I expect it to fall off of a cliff just yet. And if it does, you know, we'll find out next Wednesday, and then we can adjust from there. But I'm going in from a risk management perspective. I think the bigger risk is if you expect CPI to be low and it comes in high, there's a lot of risk. So to be on the safe side, I'd rather expect a big number, and if we don't get it, then I can adjust from there. But I want to cover my downside.
Okay. All right. So is there anything to be long in these markets? I know, you played the bull market like a maestro, okay, all the way up. And I'm wondering what the shift in strategy is, less buys, any short selling. How are you navigating this 20% decline, 30% decline in NASDAQ, et cetera?
So my positioning right now, I've been short NASDAQ since the beginning of May. I just shorted the energy sector on Friday with ERY, and I posted that on my Twitter page. And then I've got small longs in China Internet. So let's bring up some charts. We'll go here. So current positions that I've got a lot of cash right now. So I'm short triple Q through PSQ. And basically what my view is here, and we'll take a look at triple Q in a second, but if we take a look at the PSQ chart, which is just 1x inverse triple Q, it's just in an uptrend. So if we look at the chart, over
Yeah.
3 rising moving averages, you've got 4 rising moving averages total, pulling back over the 50-day, higher highs, higher lows for the most part. So this
It
is
looks
just
like
a basic.
there's 2 drives there, Larry. If you go back to the highs in May, and
Highs in
and
May,
then
yep.
that's like 1, and then the highs that we had in June is 2.
Right.
And
Yep.
I like 3 for completion. That would imply one more high coming in this, which means one more low for NASDAQ, right?
Could be. Yeah, could be. What I
Okay.
think, if you look at triple Q, just the opposite. So for me, this is just a downtrend.
Right.
Lower
Yeah.
highs, lower lows. It recently tested a lower low below
Yeah.
4 declining moving averages. Hasn't been able to get over the 50-day moving average as of yet. But here's what it really comes down to, I think, is it comes down to the CPI next week in the short term. So if the CPI comes in high, then I think that stocks probably have a lower low on the way.
Yeah. Okay.
Just based on, and I think there's a lot of when I look at the media and I look at social media, there's a lot of positive expectations that inflation is just going to come in really low. And I think the downside is if it comes in high, I think that there's probably lower lows at triple Q and S&P. So I'm short triple Q through that. I'm
Okay. Got
long
it.
ERY. So I just started this position on Friday on the members website, and this is just 2x short XLE. And what I see with XLE, and I was in the energy sector for about 18 months, and I
Yeah.
was fortunate enough to
What a
lock
ride.
in a lot of gains and get out. But what I see with XLE, besides a sharp drawdown, 50 days started to roll over, bearish 20,
crossing.
50-day cross. And a lot of these energy charts, Devon Energy, which was a big winner, that's starting to roll over. If you look at charts like Halliburton, just a lot of bearish moving averages.
25 to 35% declines in less than a month.
Yes.
In a month.
Yeah. And I think, here's what I think is going to happen. I think if you look at crude oil is starting to roll over. And right now, central banks, there's 19 central banks across the world that are tightening right now. The ECB is just about to get started. Powell's already come out and said they're not worried about a recession. They're more concerned about bringing inflation down. They've got a problem. The Fed has an inflation problem. The ECB, they've got an inflation problem. And these central banks, I think that anyone that expects that these central banks are going to back off because the economy slows down, I think that unless CPI falls off a cliff, I think they're going to continue to tighten. And that's showing up in the commodities market. I mean, commodities have just completely rolled over. Commodities indexes rolled over. Copper's rolled over. When you see these types of moves, if you take a look at these metal stocks like Freeport, Tech Resources, these are all pricing in, either a much slower economy and or a recession. But that's, if you just look at these commodities charts, they'll tell you what the markets are looking for. Now, bond yields are a little bit different because bond yields pull back. But the problem with bond yields is if inflation stays high, it puts upward pressure on these bond yields. So the bond market
Look at where they held, Larry. Right at the same May lows, near the May lows.
Yeah, 274, 270, 272. The bond market right now is stuck in the middle because if inflation stays high, then bond yields stay high. If we get a slowdown or a recession, then bond yields come down. But right now, I think the bigger concern for the markets is inflation until CPI comes down.
Okay. Yeah, it looks like we could, shoot up, maybe get another high out of this.
I've got to tell you this. I do think it's going to be tough based on, so here's what happened. So when the Fed announced June 15th is when the Fed hiked by 75 basis points. So June 15th on the chart, exactly right. And then from there, so maybe there's a short-term bounce in bond yields if inflation comes in. But I think that eventually you're going to get lower in bond yields. I don't expect bond yields to make a new high. I could be wrong, but I think it's going to take a lot of, inflation would just have to be, through the roof again for bond yields to make a new high.
Maybe a right shoulder, Larry. What do you think of that?
Could be.
You got that left shoulder in May, the head in June, and we develop a right shoulder in July.
I've got a small position. I just started a position in TLT, which is long treasuries, and it's a starter position for me. It just closed over the 50-day for the first time going back to December. I do think that TLT in the near term could have some downside pressure next week if the CPI comes in high. But I don't know that I think that there's going to be enough movement there to make lower lows. So I've got my stop below this recent low, and I'm just betting on the fact that bond yields won't make a new high. But I could be wrong. You can be wrong with anything. So it's a small starter position. I do expect to have some pressure on me, but I do think that 2-3 months from now, I think that bond yields are lower, and I think TLT is higher.
Okay. And you know how Kramer says there's always a bull market somewhere. Could it be embryonic since biotech was getting crushed way before the general market, something with LABD or anything like that? That's acting pretty good. LABU, I'm not sure exactly what it is.
It could be. It could be, and I had biotech on my list to talk to you about today. So what I'm looking at, so Argenx.
I'm a mind reader.
Yeah, you are a mind reader. Argenx made a new high. So I've had this on our high beta list for about 3 weeks now. VRTX, this is a recent chart of the day idea. That's setting up well. So XBI overall, it's on my radar screen. I haven't done anything yet because I'm still not sure. Here's the problem. So XBI looks good it had a high volume selling washout and a reversal here. It's had a lot of high volume coming in, bullish moving average crossover. All of this is very constructive. My only concern is last month when the CPI came in high, XBI went from 74 to 62, on a shot. So if what I want to see next week is if CPI comes in high, does biotech have the same type of pullback that it did with the last C? But I will say
like the index is making a new high, and this puts in a higher low, maybe back near those moving averages where they're crossing.
Of the 11 S&P sectors, the healthcare sector is the #1 ranked sector on my screen. And it's mostly, we looked at Vertex, but if you take a look at stocks like Eli Lilly, look at that in a vicious, bear market. Eli Lilly put in a high yesterday. Merck isn't too far off. And the reason is if the economy slows down, healthcare is considered, very defensive, but it's also got some growth. So consumer staples and real estate and utilities tend to do well in a slowdown, but there's really not a lot of growth. There's not a lot of profit margins in consumer staples, but the healthcare sector overall is set up the best. And XBI is on my radar screen. It's very possible that the lows could be in here. That's definitely improving. It's got some nice volume coming in.
How about if you're right for longer term yields to be dropping, even with the CPI report, you would think that would be supportive of the housing stocks?
The only problem with the housing stocks is my best case scenario is we're definitely going to get an economic slowdown. And there's a very good possibility if you just follow the technical definition of a recession. And, people like to debate it. We could spend all day debating what's a recession, but a classic definition is 2 quarters back-to-back negative GDP growth. And right now, according to the Atlanta Fed, we're there. So I don't think we get GDP until the end of July. But lower yields are good for housing stocks. But if the economy rolls over, I think housing stocks are bad.
Okay, after the Fed meeting in July, they don't have one in August, right? They won't have another meeting till September.
Yeah, September 21st. And that's another reason why, they've got one chance between now and September to try to put the lid on inflation. And that's why I really think that with only one meeting, they're going to go 75.
Okay, and maybe September it's less than 75
Could
because maybe
be.
some of these commodity prices filter into that number and they go 50 maybe and starts slowing down their tightening process.
Yeah,
Is that a
I think you're right
possibility?
on the money. Right now, I think
I mean,
we can get a decent idea where we're at. But I mean, what happens between now and September? No way to know.
yeah,
I think that inflation should hopefully come down by September because there's a lot of tightening. Oil's coming down, commodities are coming down, so hopefully they start to get it under control.
yeah. A lot of people they talk about, when the Fed flips, they think that they're going to go, there'll be something breaks and they're going to go from tightening back to QE. But I believe there's going to be at least a transition step of less tightening or pausing and not just going into reverse. Don't you think that's more plausible?
Yes. Yeah. From what I've seen in the future in the Fed fund futures market, I think the first hint of any type of rate cuts is like the middle of 2023. Now, keep in mind these markets move extremely fast. The data comes in very fast. CPI could fall off a cliff, the economy could slow down. But yeah, I don't know that with CPI at 8% and the Fed funds, at 175, I don't know that they're going to. I would highly not expect them to cut anytime in 2022.
Okay. All right.
But
So,
it could all change. All we can really talk about is what we know right now. But I think that inflation's the bigger problem right now.
okay. So, any view on this extremely strong dollar?
I don't follow the dollar too much because there's so many factors
UUP.
that are involved with
Yeah.
the dollar that the way that I look at it is if I can't be very, very proficient at it, I don't talk too much about it. So the only thing I can say about the dollar, obviously, it's in a very, very strong uptrend. But that's really all I can say about
Okay. And you like China. They're the only central bank that's still in an easing mode. They may not get the same bang for the buck, but
it.
at
They
least,
just started to ease. So
yeah,
I started a position a few weeks ago, and this is a starter position as well. So
yeah,
China Internet, which is the KWEB ETF, and the key
right.
thing, very, very high volume reversal in March. Now, obviously, this is a lot more speculative, but if we take a look at the way that the moving averages are developing, so you've got an uptrend, higher highs, higher lows, rising 50-day moving average. It's testing below the 20-day. They've got some issues with maybe COVID again. But if you
Yeah,
take a look at the China A share market, that's been moving pretty nicely.
real
Alibaba
nice.
is I
Yeah,
believe the largest market cap. It's either Alibaba or Tencent. But if you look at the BABA chart, it's coming out of a stage one base. Moving averages are
on the
turning
verge of
higher.
a breakout.
Yeah, exactly right. Just below this 200-day moving average. And, the KWEB and Triple Q really diverted from each other. So last year, when Triple Q was making new highs, these China internet stocks were making new lows. So it's very possible, especially with the central, the PBOC, they're easing. So it's a starter position for me in KWEB. If it starts to work, I can always add to it. But this is along with biotech, I'd say these are two higher beta sectors that are showing some signs of life.
Okay. Anything you want to wrap with, Larry?
No, that's about it. Really, the key thing is I think that we have to adapt to what's happening in the market, but from a risk management perspective, with everything in a pretty strong downtrend, I think it makes more sense to be defensive, expect the bad news So if the bad news comes in, and that could be high CPI, you know, if we expect the bad news and we're prepared for it, you generally don't get caught off guard and lose a lot of money. And then if the news comes in great, you know, then we can get more aggressive on the upside.
Okay, and the best way for people to follow and your work, your website. You
Two
wanna show
ways.
that?
Thank you for asking. So on Twitter, my handle is at LMT978. I post quite a bit through the day, and almost everything I post is just technical and about the stock market. I keep it very, stocks, bonds, but just on the markets in general. I keep everything very focused. And then if you want to find me on my website, so my website is bluechipdaily.com. We've got a 30-day free trial so people can find out exactly what's going on. And then if you go to our home page, you can see just some of the most recent market calls. You know, we started a position in ERY on Friday, and that was up, 10% the very next day. So that started off in the right direction. But for the most part, we've been on the right side of, and you know this because we've been talking for a while, but we've been on the right side of all the major market moves for quite a while now.
Yeah, so you know what? You're a prime example of if you don't learn how to change your mind, you won't have any change left. W.D. Gann. And I've been, most of the years I've been talking to you, you've been a steadfast bull, and that started to shift the last time we talked. And it shows that, you're a pro. You don't always have to be long. There are two sides of the markets to trade. And congratulations on some guys just cannot make that mental shift from being a dip buyer to a rip seller. So congratulations, Larry. Nice work.
Dale, thank you. I appreciate it. I always appreciate when you and Blake have me on the show. And I'm looking forward to speaking in a few months and see what happens from here.
Yeah, we'll get back together in the fall, Larry. And thank you so much for being here today, sharing your work and perspectives with our community, my trading warrior brother.
Dale, thank you so much, my friend. I appreciate it, and I look forward to speaking to you soon.
All right, buddy. Good hunting. Good hunting, everybody. Don't just count your pips, count your blessings, and you could join the team in 20 minutes on the morning edge. We'll see you tomorrow for the NFP, and I think it'll be no frickin' problem. So we'll see you then, everyone. Adios. Thanks again, Larry.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.